Hello everyone, welcome back to my channel. Before we dive into today's absolutely explosive topic, I need you to stop what you're doing and pay attention because what I'm about to reveal could affect your financial future in ways you never imagined. This isn't just another market update. This is a warning signal that's flashing red across the entire precious metals industry. If you have investments in silver, if you're thinking about buying silver, or if you simply care about protecting your wealth, the next few minutes could be the most important thing you watch all week. Make sure you hit that subscribe button and ring the notification bell because we're tracking the situation minute by minute, and you need to stay updated. So what exactly happened? China, the world's largest silver consumer and one of the biggest players in the global precious metals market, has just done something unprecedented. They've halted silver deliveries. Now, I know what some of you are thinking. Maybe this is temporary. Maybe it's just a logistical issue. Maybe it'll blow over in a few days. But here's why this is absolutely critical and why experts are calling this a potential force majeure event. When China makes a move like this in the commodities market, it sends shockwaves throughout the entire global financial system. This isn't just about silver bars sitting in a warehouse somewhere. This is about supply chains, industrial production, investment portfolios, and the value of precious metals worldwide. The ripple effects of this decision are already being felt across international markets, and they're only going to intensify. Let me break down the exterior situation, what's happening on the surface level that everyone can see. China's announcement came suddenly, catching most market analysts completely off guard. Trading volumes and silver futures spiked immediately. Prices began fluctuating wildly within hours of the news breaking. International dealers reported panic buying from investors trying to secure physical silver before supplies completely dry up. What we're seeing externally is a market in distress, a clear signal that something fundamental has shifted in the precious metals landscape. Major refineries are scrambling to understand the full implications. Shipping companies that transport silver are adjusting their routes and contracts. Banks that deal in precious metals derivatives are recalculating their risk exposure. This exterior chaos is just the beginning, and it's visible to anyone paying attention to financial markets right now. Now let's look at the interior mechanics of what this really means for the silver market specifically. China consumes approximately 60% of the world's silver for industrial applications. They use it in solar panels, electronics, batteries, and countless manufacturing processes. When they halt deliveries, it's not just about investment silver, it's about disrupting the supply chain for technology, renewable energy, and manufacturing sectors globally. Interior to the precious metals market, this creates an immediate supply crunch. Physical silver becomes harder to obtain. Premiums over spot price start climbing. Delivery times extend from weeks to months. Vaults and storage facilities see unprecedented withdrawal requests. What's happening inside the market structure is a fundamental breakdown of the normal supply and demand equilibrium. Dealers who promised delivery are now facing the reality that they might not be able to fulfill orders. Investors holding paper silver, meaning ETFs and futures contracts, are suddenly questioning whether their investments are actually backed by physical metal. This interior breakdown is what should truly concern anyone involved in precious metals investing. The performance of silver markets following China's announcement has been nothing short of dramatic. Within the first trading session after the news broke, silver spot prices jumped significantly. Volume increased by triple-digit percentages across major exchanges. Physical silver coins and bars saw premiums explode, with some dealers reporting markups of 50 to 70% above spot price. But here's where it gets really interesting from a performance standpoint. This isn't just a short-term spike. Market analysts are projecting that if China's halt continues for any extended period, we could see silver prices reaching levels not seen in decades. The performance metrics that investors need to watch include not just spot price, but the spread between paper silver and physical silver, delivery times from major dealers, and the inventory levels at exchanges like the COMEX. Right now, all of these performance indicators are flashing warning signals. The gap between paper and physical silver is widening at an alarming rate. What this tells us is that the market is performing exactly as you would expect during a supply crisis, with physical assets becoming increasingly valuable, while paper promises become increasingly questionable. From a safety features perspective, and I'm talking about protecting your wealth here, this situation highlights exactly why financial experts have been warning about counterparty risk in precious metals. If you own paper silver through ETFs or futures contracts, you're depending on someone else's promise to deliver actual metal. That promise is only as good as the institution behind it and their ability to source physical silver. The safety feature of owning physical silver in your possession is that you eliminate counterparty risk entirely. Nobody can halt delivery of something you already possess. Nobody can change the terms of ownership. Nobody can tell you that your silver is unavailable due to force majeure conditions. This is why precious metals advocates have been saying for years that if you don't hold it, you don't own it. The safety of physical possession versus paper promises has never been more apparent than right now. Additionally, diversification across different precious metals and even different storage locations provides an extra layer of safety. Don't put all your wealth in one basket, and don't rely entirely on promises from institutions that might face unprecedented challenges. What are the unique selling points of taking action right now? First, awareness. Most people aren't paying attention to this yet. By the time mainstream media covers this extensively, prices will have already moved significantly. Second, availability. Right now, you can still find physical silver, though at higher premiums. In a few weeks or months, availability might become severely restricted. Third, positioning. Those who act decisively during market disruptions are often the ones who benefit most when the dust settles. The unique opportunity here is understanding that we're witnessing a historic moment in precious metals markets. China's decision isn't made lightly. They're signaling something about global supply chains, currency concerns, or strategic resource positioning. Being ahead of this curve means potentially protecting your wealth while others are still figuring out what's happening. The unique selling point of physical silver right now is its dual nature as both an industrial metal and a monetary metal, making it valuable from multiple perspectives simultaneously. Now let's talk about price, because this is where things get really practical for anyone watching this video. As I mentioned, premiums on physical silver have already spiked dramatically. Coins that normally carry $2 to $3 premiums over spot price are now selling for $8 to $12 over spot at many dealers. Bars are seeing similar increases. Some dealers have temporarily suspended sales altogether while they reassess inventory and pricing. If you're looking at current prices and thinking they're too high, consider this perspective. In a genuine supply crisis, price becomes secondary to availability. You can't buy what doesn't exist at any price. The question isn't whether current prices are high compared to last month. The question is whether securing physical silver now at current prices will prove to be a wise decision 6 months or a year from now if the situation escalates further. Historical precedent from previous precious metals. Supply disruptions suggest that early action, even at elevated prices, often proves prudent in retrospect. Watch the spread between paper spot price and physical premiums carefully. A widening spread indicates growing market stress and potentially greater risks ahead. In conclusion, what we're witnessing with China halting silver deliveries is potentially a watershed moment for precious metals markets. Whether this evolves into a full-blown crisis or resolves relatively quickly, the warning signals are clear. The global financial system has vulnerabilities that most people never consider until events like this force attention to them. For anyone holding wealth in traditional assets exclusively, this is a wake-up call about diversification. For anyone already invested in precious metals, this validates the importance of physical ownership over paper promises. The key takeaways are these. Stay informed about developing situations, prioritize physical possession over paper claims. Understand counterparty risks in your investments, and don't wait for mainstream consensus before taking protective action. Whatever you decide to do with this information, make sure you're making informed decisions based on facts rather than panic or complacency. This channel will continue monitoring the situation closely and bringing you updates as they develop. If you found this information valuable, smash that like button. Share this video with anyone who needs to know about this situation, and subscribe to Hook In Video for more critical financial updates. Your wealth and your future deserve this level of attention. Stay safe out there, stay informed, and I'll see you in the next video. End screen with subscribe button and next video recommendations. Claude is AI and can make mistakes. Please double check responses.